Some other major action taking place in the commodities front as gold and cotton futures saw gains pushing prices for both of them into new record territories. Now, will these increases affect the economy and the consumer? Will prices get passed along? Let's find out. We have John Licata. He's the chief commodity strategist for Blue Phoenix, and he's here to tell us all about it. John, good to have you with us here on Bloomberg.
Pimm, let's see you again.
The ties are getting skinnier, but the prices of commodities are going up. I mean, there must be some kind of connection.
Well, cotton and silk, Pimm. I got to say.
That's right. That's what I'm serious. You got to save on the silk. Got to save on the cotton. Are these commodity prices going to increase like they have been in the past? Are we just going to see this lockstep move up?
Well, I mean, as you know, for a long time, you and I have been talking about gold prices, silver prices. Yeah, I really think that we've actually reached a point right now where investors should start locking in profits.
$1,400 for gold, $25 an ounce for silver, right? I mean,
yeah, $13.70.
Someone's offering you some money.
$13.75 was the gold price that I called on Bloomberg about a year ago. And now that we've seen those levels, I'm very comfortable with that pick, especially as we start entering the holiday season. It's my viewpoint that a lot of hedge fund managers that have lackluster results over the last few years are going to be looking to capitalize on some of these moves.
Well, John Paulson's got a big position in the gold area. Are there commodities that you haven't seen rocket the way other commodities? I mean, is there anything left to pick over? Because I know that you talk about uranium. You just made a big study of uranium.
Yeah, that's right. Uranium is a metal that has risen about 33% since June. Right now we're trading in the mid-$55 level, but we're still far away from the level seen in 2007, where the price of uranium was over $140 per pound. And it's my belief that the move to embrace clean energy, the new administration being put into office, I do think in 2011, in some shape or form, we will see cap and trade being enacted. I think that's going to benefit uranium prices, and we've been seeing a lot of favorable corporate data.
How do you play uranium? I mean, uranium is not, if I turn off the lights, you don't glow in the dark or anything. You've been hanging around some uranium mines recently. Do you buy mines? Do you buy miners? Or can you actually go out and buy, like, actual uranium?
Well, I mean, you really can't go out and just go store uranium like you could if you were buying gold or silver. But I would recommend, looking at some of the miners. I think not every miner has been involved in this upside move. Strathmore Minerals is a client of Blue Phoenix, for disclosure.
Strathmore Minerals, okay.
Yes, that's a wonderful company. They have two properties I think are really interesting. In Santa Fe, it's the Roca Honda facility. Sumitomo of Japan is a strategic partner of theirs. It's a 60-40 split with 62 Strathmore. They could, between two mines, like I said, one in Roca Honda in Santa Fe, which, by the way, a mile down the road, Pimm, Peabody Coal actually had a coal plant. So the fact that Peabody got a permit makes me a little more optimistic about permitting going forward. And there actually was a new governor-elect. She's actually a Latina, and she was very pro-uranium. I think it's going to benefit the uranium companies that are moving in the area. Cameco just did announced a deal the other day that they were looking to move their assets into South Texas. But, I like the fact that compared to Cameco, Strathmore just seems very discounted. I mean,
Cameco is the one that's had the problems up at Cigar Lake with all the flooding in the mines in Canada for quite a while. They're still waiting on a resolution there. We're taking a special look at investing in Latin America, two of the region's major economic powers facing new political realities right now. For example, in Brazil, the transition to Dilma Rousseff's administration has already begun. The country's first female president will take over from Luiz Inácio Lula da Silva, who oversaw a period of explosive growth in the country. Meanwhile, in Argentina, President Cristina Kirchner must find her own way forward. Is coming after the death of the ex-president and her husband, the former President Nestor Kirchner. He was the architect of many of the country's economic policies. Here to tell us more about what's going on in those regions and the link to commodities, we have John Licata, commodity strategist at Blue Phoenix, and Bret Rosen, Latin American debt strategist for Standard Chartered Bank. Gentlemen, good to have you with us. John, glad you could stay around. Bret, can you set the stage for what's going on in Brazil? Because we know about the election results. Dilma Rousseff is coming into power. Are there going to be a lot of changes in terms of who heads which ministry and who's going to, in a sense, be the favored area for economic advancement?
Well, this is the main topic that the market's been focused on over the last week and a half since Dilma was elected at the end of October. Who will fill the central bank ministry? Who will fill the finance ministry? Those are really the two main areas that markets have been most focused on. And we've heard a lot of conflicting signals. Each day there's sort of a new rumor who will take over the central bank, who will take over the finance ministry. And right now we're just waiting the news of who those individuals will be.
Should we be concerned? I mean, is there something really to worry about? Are we looking for some major departure from the administration of Lula?
We don't think that there's going to be a major departure. And in fact, if you'll recall, Dilma was the chosen candidate of Lula. And so in that regard, the markets and us, we expect policy continuity. We expect the similar macroeconomic platform that was evident in the last 8 years of Lula to continue during the Dilma government. Even today, there was a discussion within Brazil about with the transition team trying to sort out who these ministry heads are. Again, a lot of names have been thrown out, but we really expect policy continuity even if the names are different.
John Licata, come in on this topic of what's going on in Brazil, because I know you're following a lot of what's going on when it comes to Petrobras and the drilling and exploration in the deep water off the coast of Brazil. Any change for commodity-based investors?
Well, I mean, I definitely agree that I don't think the new Brazilian government's going to look to throw a rock into a pond that's been very calm for probably one of the better performing economies the last couple of years. So I think that's actually going to be maintained. Petrobras is a company that I'm not as high on as many of the analysts on the street. Look at just what happened with the Deepwater Horizon incident with BP. Look at the time factors that took to get down and to close the Horizon well. When you start to bring in the deepwater salt formations, I think that, in my opinion, it's going to cost a lot more than what they're projecting. Granted, they're sitting on a lot of oil, Pimm. I think it's going to take years for that actually to come to the marketplace, though.
All right. So another commodity that Brazil focuses on is iron ore, right? Vale is a big operator there. What's your outlook in terms of demand for iron ore for steelmaking?
Well, I definitely think it's going to continue to be high, but I've questioned some of the rallies we've been seeing in some of the commodities just for those reasons of time. I think if you're going to look into play the growth in Brazil, maybe take a look at Gerdau. Gerdau is the construction play.
Used to be Gerdau America Steel, right?
I think that's one of the best plays when you're looking at the overall commodity. It's basically playing a basket of commodities in one stop. And I think, as we were just talking off camera about the next World Cup that's in Brazil and then the Olympics in Rio de Janeiro, I think a lot of the infrastructure that's going to be put in place, I think still hasn't been put in place. And in the next couple of years, could be a good opportunity to play from the commodity side.
But Bret Rosen, should investors focus just as much on the domestic economy of Brazil in terms of where they want to put their capital?
Well, I think you make a good point. You have the domestic sector has been booming in Brazil, and so a lot of market players look at Brazil as purely a commodity story, purely a function of what's going on in Asia and demand for the commodities that Brazil produces, like soybeans, like iron ore, and so on. But really the domestic economy has now been booming for several years. You have the combination of lower real interest rates, higher real wages, and just macroeconomic stability, which is unleashing domestic demand within Brazil. So anecdotally, if you go to Sao Paulo, you go to Rio, you go to a large shopping mall, you'll see those malls packed with individuals with full shopping bags. And it's a market contrast from a lot of the other economies in the world right now where the consumer is deleveraging. In Brazil, you haven't had that same extent of consumer leverage that has been such a big impact in the developed world.
Is the attempt by the government to, in a sense, mitigate the inflows of foreign capital, with some kind of tax in terms of transferring money into reals, is that going to continue?
Well, this is a debate that's going on in Brazil right now. The currency has appreciated dramatically in real and nominal terms over the last several years, and it is starting to have an impact on certain exporters within the country. Recently, the IOF tax, which was a tax that essentially is
We're going to continue.
Brett, just want to continue a little bit more on Brazil, give you the opportunity to complete that thought, because there were these controls that were imposed on foreign capital flowing into the country. And is that something that's likely to continue? Because, if you get foreign money flowing in, that can always be a danger for inflation accelerating.
Well, what the Brazilians have done is they've imposed what's called the IOF tax, which is a financial inflows tax. So if I send money as a foreigner into the fixed income market in Brazil, the Brazilians have imposed a higher tax, which is now 6% on money coming in. That compares with 11 to 12% with what Brazilian bonds and local currency terms are yielding. So there's still been a lot of inflow into that local market. But as you point out, there is a danger to too much capital coming into Brazil. That does lead to appreciation of the FX rate, and that's something that the authorities are looking to deal with. And there's a lot of different ways that they can.
So are you recommending in clients right now, should they be investing more in Brazil, or do you want to just wait and see what happens with the Dilma Rousseff government a little bit?
We've had a pretty neutral view on the sovereign debt within Brazil. It's rallied tremendously over the last several years. So when you look at yields,
investment grade status now.
Correct. And debt in Brazil now, 10-year bonds are yielding 3.5% in dollar terms. So we recommend a neutral view on Brazil. And again, vis-a-vis the rest of the region, Brazil's doing very well, but those yields are quite low.
All right. So now take me across the border. Let's go down to Argentina and tell me what's happening there, because there's a political sort of turmoil happening, but it's not because there was an election. It was because, unfortunately, we had the sudden death of the former president, Nestor Kirchner.
Right. Well, ex-President Kirchner passed away 2 weeks ago, or a little shy of 2 weeks ago, and he was really seen as the architect of the economic policies in Argentina, even though it's his wife that's the current president. He had been the president prior to his current president, Cristina Kirchner, and it was also seen as a likely candidate for the presidency in 2011. So what you now have is you have a vacuum of power in Argentina, and there's a number of different individuals that we expect will be competing to fill that vacuum, one of which is the actual president, Cristina Kirchner.
Now, what about the Peronist government? Because this now sort of throws that at least a little bit into question, no?
Right. The Peronists have governed Argentina for much of the last several decades, and the Peronists don't necessarily represent an ideology. They represent a number of ideologies, and so what you'll have is a number of different powerful leaders from throughout Argentina competing to lead the Peronist party into the next election, and you may even have a split where you have a opposition Peronist candidate and a government-leaning Peronist candidate. That would be candidates in 2011.
So what's the outlook for the economy in Argentina? I mean, have they gotten their act together? Because it seems as though whether it's the Paris Club or the IMF, they've been working at trying to resolve some of the issues related to the sovereign debt. I mean, it's all happened.
Well, the real economy is doing very well. And in fact, we were speaking about Brazil earlier. Argentina is benefiting a lot from the economic growth in Brazil. It's their main trading partner. So, Argentina's economy is growing at least 9% in 2010. We'd probably look for 5% growth in 2011. Very strong. Central bank reserves are an all-time high. Fiscal performance is doing fine. But as you mentioned, there's other concerns. There's the outstanding debt with the Paris Club, which is unresolved. There's still, even after 2 debt exchanges, there's still $6.5 billion of defaulted debt going back to the 2001 default that has still not been resolved. And on top of it, you have inflation of probably 25 to 30% per year.
So how do they fix this?
Well, it's complex because a lot of these problems have been long-standing, and so to resolve high inflation requires tighter monetary and tighter fiscal policies, which during an election year we don't expect to happen. So we expect inflation to actually rise further in 2011. All
right. So if you take a look at both of these economies right now, are you telling investors? I mean, you've given me a caveat really for both of them. It seems almost like neutrality might be the word right now.
I think after the rallies that you've seen in both markets, a cautious position is the right way to go. We don't normally compare Argentina to Brazil, even though they're both, obviously geographically right next to each other, because, as you mentioned, Brazil's investment grade, Argentina is coming out of default. If you look at the sovereign ratings of each, they're completely different. If you look at the spreads, I mentioned where Brazil bonds are trading, Argentinian bonds trade several hundred basis points wide of that. So, we really look in Argentina almost in isolation as opposed to Brazil.
Now, these are both, though, political issues. It's interesting how politics is such an important driver of market valuations, not only in places like the United States with our midterm elections, but also in places like Brazil and in Argentina.
Very much so. I mean, if we look at, you're asking how we would be positioned in Argentina over the next year. Argentinian assets, equities, fixed income, we expect that they're going to trade off of political news, off of polls that come out, off of which candidate is running, off of which candidate's not running, off of statements that are made by the various candidates. So, really that is the main factor that will impact valuations over the next year and beyond.
Now we've noted previously that there's been a lot of flow of funds from equities into bond funds, and then also from U.S.-based funds to non-U.S.-based investments. Are you seeing the flows to Latin America continue, or are they kind of pulled back a little bit?
The flows have been tremendous. And so when we look at flow of funds both in equities and in debt, we've seen record numbers week after week, month after month. Correct.
All right. I want to thank you very much, Bret Rosen, coming to us from Standard Chartered Bank.